Today, SPY got the bull breakout with the daily close above the resistance at 420, which means we could be well on our way to the August highs. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. Don't forget to take advantage of the Memorial Day sale where you can get 50% off 1 month of bank trade alerts or the Stocks Channel Discord. You can find out how to join and how to claim that discount by clicking on the links in the description of this video. Alright, today's SPY was up 0.95% and we did get the daily close breakout above 420, which means we still have the bull trend, we still have the bullish price action, and we have upside price targets at 425.5 and 430. Now keep in mind, like I said before, in order for SPY to continue climbing higher, we need to see participation from the other sectors like financials, industrials, and healthcare. Today we started to see that, but we need to see that trend continuing. And even if big tech is starting to cool down, we could still see SPY climbing higher if those other sectors are participating. Market breadth has been very narrow, and if we start to see it broaden with those other sectors joining the rally, we could get a very strong bull trend and we could see SPY going even higher than what I've already predicted. Remember, SPY 430 is nothing new. This is not a new idea by any means. It is simply taking a long time to get there. But the point of the matter is, if you're following price action and trend, you've known to stay bullish all along, because I continue to tell you we're not bearish until we lose critical support. And we have not yet lost critical support. So ride the wave, as the saying goes, and stay with the trend, because the trend is your friend until the end. And as long as you know when the trend is ending and the price action is rolling over and getting ready to die, you can manage your risk very tightly and there's no reason to panic. Keep in mind, you are a retailer and you can hit one button to fully liquidate your entire portfolio, whereas big money cannot do that. Don't buy into the fear and the narratives that are continuing to go around. As long as this chart is bullish, continue to trade it bullishly. We have bullish price action as long as we're above 417, or you can now up your risk level to 420. Just continue to block out all of the noise and take out all of your bias and only trade what the price action is giving you, and try to stay in the direction of the trend, which is the path of least resistance. So we're still looking for higher prices while SPY is above 417, or you can use the risk level down here at 414. If we start to roll over and die, we're going to see it in the price action first, and we're going to instantly get that information from the price. On the NASDAQ 100 triple Qs, we were up 1.17% today, and the triple Qs did not get quite as bullish of a day as SPY because we did not break out to the higher high. But we are getting a higher high close because the previous close was just under 350. Now with the triple Qs, we are in the bear cave between 350 and 360. So you need to be very cautious if you're just now getting bullish in the triple Qs, or you need to manage your risk at this previous low right around 347. If we break below 347, there is a very good chance we're coming down towards 337 and the gap fill at 333. Again, when we fill that gap is unknown, but there's a very, very good chance that gap is going to fill once we see the correction in the tech sector. That correction could be coming right around the corner, and as you can tell from the chart, we have no price action evidence that we're starting a correction until we lose some of this support and at least get a close down below the 5 EMA. So just let the price action do all the talking, and keep in mind the triple Qs are getting a little parabolic, so we may go sideways to down before we hit 360. But if we go straight to 360, we'll be even more overextended, which means there's a possibility we get that high volume selling to lower prices. So while the triple Qs are bullish, just be very cautious in the bear cave between 350 and 360, and there's no reason to take any unnecessary risk. On the Dow Jones, we were up 0.44% today with another bounce off of the critical support at 327 and the 200 daily moving average, but we're still below the resistance at 333 and 336. In order to get more bullish on the Dow Jones, I would like to wait until we close above 336, and that will confirm we're breaking out of the bear trend. If we break below 327, I'm looking for the gap fill below at 322. On the Russell 2000 IWM ETF, we were up 1.08% and we tested critical resistance at 176 and just got a little bit of rejection from that level. To get more bullish, we need to break above 176 and above the gap fill at 181. Otherwise, we're still in a very powerful downtrend below a negatively sloping 200 daily moving average with a gap to fill below at 171.56 and critical support at 170. If we break 170, we're likely going to make 52-week lows. On the ARKK ETF, we're up 1.56% today, and ARKK is at the very critical resistance zone now between 40.5 and 41.5. If we start to close above this resistance zone, that is going to be bullish, and it could tell us we're going to 43 and then 44. However, wait for price action to confirm it and wait for this bull trend to confirm. And the longer we can spend above 40.5, the better, and the more bullish this will start to look. On the VIX, we were down 12.5% today as the VIX got absolutely destroyed one day before Friday, and typically Friday is when we see the VIX getting crushed. So that does open up the opportunity for a little bit more volatility tomorrow, but it doesn't guarantee it. The VIX could be trending down towards 15, and like I continue to tell you, we're not getting bearish on this market until the VIX is above 20. On Bitcoin, we're currently down about 1.2%, and Bitcoin is still seeing some decent volume selling from the lower high rejection from 28,000, and we're sitting right on top of this critical support zone at 27,000. We're getting more bullish if we break above 28,000 and more bearish if we break below 27,000, and the downside target will be 23,000 to 24,000. On Amazon stock, we were up 1.82% today, and Amazon is looking very bullish while it's trading above 120, and we have a gap to fill above at 125.5 and a price target right around 128. So Amazon is still looking good above 120. So if we break below 120, we're likely coming back down towards support right around 115. On Tesla stock, we're up 1.75%, and Tesla is behaving very technically sound because the second day in a row back over the 200 daily moving average told us we were likely going to 208, and that's exactly what we did today. Above 208, we're going to 214 and then 230, but keep in mind it is possible to get rejected from here because it is resistance. So now that we're at resistance, this is a great time to lock in profits and wait until we break through resistance before getting more bullish. Critical downside support remains 197. On Apple stock, we were up 1.61% today, and Apple did break above that resistance at 179 and did close outside the upper Bollinger Band, so it is getting a little too far overextended. Previously, when we're outside the Bollinger Band, we go sideways to down, so it is possible Apple is going to cool down, and we're very close to the previous closing all-time high at 182. Keep in mind, Apple is approaching previous all-time highs, which is a very critical resistance zone, so there's no reason to be overly bullish until we break above it and confirm a bull market. On the financials, we're up 1.1% today, and we're right at resistance at the negatively sloping 20 daily moving average, and we have gaps to fill above and below, so don't get bullish until we can clear this resistance trend line. On the industrials, we're up 1.26%, bouncing outside the lower Bollinger Band and coming right back up to the 13 EMA, which means you can still stay bullish above 97, which is the critical support zone. In order to break out of the bear trend, we need to break all the way back above 101. On the healthcare sector, we were up 0.63% today, continuing the bounce from yesterday, and we're very likely coming back up towards this resistance at 130. The healthcare sector is one of those sectors we need to see strengthen in order to continue to push the S&P 500 higher. The energy sector was up 1.24% today, closing the gap at 78, and that could be our lower high rejection until we fill the gap below at 73. I'm still bearish on energy until we can start breaking back over 80. So jumping back over the S&P 500, if you just listen to the price action and the trend, that will stop you from losing money shorting this market, and we still have nothing on the chart of SPY that tells us it's time to start shorting heavily. Remember, we need price action to roll over and we need to lose the bull trend, and then we can get a lot more bearish for the gap fills below. We still have gap fills above and we haven't touched the August highs yet, so there could be more upside in the tank before we roll over and die. So just simply have a trade plan and let the price action do all the talking. Don't forget to take advantage of my Memorial Day sale where you can get 50% off 1 month of Bank Trade Alerts or the Stocks Channel Discord server. You can find out how to claim that discount by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.